Hi everyone and welcome to the London session update with myself, Kathleen Brooks, on Friday the 24th of May 2013. Well, we've had a wicked ride in the markets this week. We've seen the Nikkei go up, go down. Just overnight, it had a crazy session. It started off lower, it then moved higher a little bit, and it ended up around about flat, just below 1% higher on the day. European stock markets not doing too much. It's been a fairly uneventful European session so far. We've seen some better than expected, actually, French business sentiment data, and then the IFO was mixed. While the current expectations were stronger and the current assessment was stronger, the future expectations, which some people consider to be the more important part of the survey, was actually flat on the month. So still at a fairly high level, but really back from those highs from earlier this year. Now that hasn't actually stopped the euro from doing quite well. Let's take a look here. As you can see, euro dollar really tested 29.80, which is the pink line on the chart, which corresponds to the 50-day moving average. Now that is a bullish development if we do get a weekly close above there, but one thing we would point out is that 130.20 to 40 is a huge level of resistance. Not only is it around about that psychologically important level of 130, but it's also the 200-day moving average and the base of the daily Ichimoku cloud. So that could attract a lot of selling interest. Now we think generally that we are range trading for in the euro at the moment because there's a lot of uncertainty out there. Uncertainty when the Fed will taper QE purchases, uncertainty about the European economic outlook. Will it pick up or will it continue to flatten? What's going on with this Nikkei volatility? So we think that ranges are the order of the day, but we do think that any sell-off or profit taking around about that 130.20 to 40 level, the downside will be cushioned around about 128. Now that looks like to us like a double bottom. Not only was it the bottom on the 17th of May, it was also the bottom at the end of March. So that does look like very, very solid support now. So we are looking for range trading in euro dollar, and we do think that this break above the 50-day moving average could potentially be used as an excuse to take some profits into the weekend. Now the other thing obviously that's on everyone's mind is what's going on in Japan, the dollar yen. As you can see, this is a daily chart. We've really backed off from those highs around 103.70. The lows today have been 101.10, with the high being 102.60. We're currently trading slap bang in the middle of that, but it does look like we're just kind of hovering sideways, really, not really knowing what to make of what's been going on, really. One thing we do know is that with the is that a strengthening yen does not equate to good or to a good environment for stock market gains in Japan. So the Nikkei, again, really just treading water for most of this session. Now what the blue line on that chart does really show kind of upward channel support there. That comes in just below 100, and that to us is the base of the range. If we get below there, very bearish development. The fact that we haven't suggests that we could still make some gains in dollar yen, but it might be more of a grind higher. We know level, the highs from earlier this week, are a really key level of resistance there that we will be watching very closely. But overall, lots to digest as we go into the weekend. Enjoy the weekend and please do join us next week for more. Thank you.